you. Welcome to Commercial Real Estate Master Plan. Thank you for coming out. We had a great night of broker panel and questions. Any questions you have, the brokers are going to answer for you tonight. Then after we're done, we're going to go ahead and network. So get some good information. And I'm one of your hosts, Rob DeCuster, along with David Turner, Yoshi Asado, Dick DeLeon. If you do not know us, please come up and introduce yourself to us. We would love to get into it. So thank you for coming out, and I'm going to turn it over to Dave, who's going to MC the broker panel. Thanks.
All right, thank you, everybody. Before we get started, I just want to thank everybody for coming out this evening. A great morning. Also wanted to first call out our sponsor group. We have the department educators, Nick from the department educators over here. We have Shannon with steward title, to my left here. Please introduce yourselves. Shannon is also raffling off an awesome album of bourbon. So please throw your business card in the jar and we will raffle that off probably around 8 o'clock or so. We'll have to be present to win that. So please throw your card in, come and say hi. Also, Rainy King, I'm not sure if Aaron or Jeff are here yet. Rainy King is also a sponsor of ours this evening, and Worldwide Commercial here. Jared in the back, Worldwide, and Tyler on here, Worldwide Commercial. So also, we're gonna get started. We'll take about 15-20 minutes for open discussion and Q&A. Please be thinking of some questions to ask because we're gonna try to get some engagement from our audience tonight as well. First thing is to get started, I'm gonna ask you guys to introduce yourselves, just a quick intro, your firm, and your focus markets. Thank you.
Hey everybody, I'm John Krebs. I'm a broker with the multifamily group based out of Dallas, and we do, B and C class multifamily, probably 2 to 1 to 20 million. Here in DFW, San Antonio, Houston. Happy to be here.
I'm Tyler Bynum with Worldwide Commercial. We're a boutique firm right here in Frisco. Have an office as well in Austin. Basically just focus major metroplexes, Dallas, and Houston, all these sides.
Guys, Chickens tonight. I'm here with GREA. We're based by the Galleria here in Dallas. We have coaching offices nationwide, and we focus on B&C multifamily, $5 to $30 million space.
My name is Sarah Warren. I'm a broker with Grace Skill here in the Dallas office. I'm covering the DFW market, but Grace will the whole beauty market nationwide, and I'm covering all of
Back and forth. Awesome. So we've got a mixed experience here in the room. Some newer operators, some people who are just getting started in multifamily, and some very highly experienced operators here as well. Also some passive investors, people looking to place their money with some experienced general partner team. So obviously there's been a lot of movement in the market over the last 12 months, and we've seen between interest rates, a lot of volatility, and the volume shifted obviously since early of last year. What asset class would you see? I'll start with Sterling. What asset class would you see is still trading with the highest volume today?
I would say the most activity has definitely taken place in the Class B and C value add opportunities. There's not been as many transactions in the Class A space, so I'd say majority of the transactions we've seen in the past 12 months have been in the value add opportunity.
Yeah, I'd like to add that. I'm primarily on the B&C space. I piggyback that, and also when I was looking at this question, I think something that we can't disregard in terms of which asset class is trading the most. I think something you have to look at is which assets are priced correctly are the ones that are and the BOVs and valuations that we're doing for owners between A, B, and C class. There's been a disconnect in pricing. So whichever owner I think is priced correctly in this market, that's where I think you're seeing velocity, and that's across I think A, B, and C. So that's my answer.
Agreed with Chip Boozer. I was gonna say, I'm not married to an asset class right now. I don't think there's one, but honestly, trading, me personally, not saying one trading with the other. At the moment, it's, if it underwrites, it underwrites, and that seems to be very common.
We've just been focusing on smaller deals. I think, there's just a little bit easier to transact on a little less price sensitive interest rates, so we've been doing, a handful of smaller ones lately.
And to kind of piggyback off of that, and something that Shabuza mentioned as well, it's providing a bit of guidance to the sellers, helping them understand how can you price the asset right in the market. So two-part question. What's the gap and how far are we off from a bid to ask price with these assets? And also, how are you coaching up your sellers as you're preparing them to go to market to price their deals so that they're going to get some attention?
Yeah, I had 3 properties that I, marketed last year that didn't sell. And so I've been reluctant and encouraging my guys to be, careful about, what you're promising these sellers, because if they don't have to sell, it's not a great time to sell. And, you just kind of have to be upfront with them about that. And, there's still opportunities, I think, with, some longer term owners that are just ready, like for selling a portfolio here in DFW for a guy who's had it for, 15 years. And so he's still in a good place. And it feels like, yeah, he might probably miss the top of the market, but it's still, he's ready to retire. He's ready to be done. So, yeah, that's what I was saying.
I'd say when I was up here about last month, I think I was saying that most deals we've seen doing DOBs on, we were about 10% off of what the seller really wanted. It seemed to be kind of on the dot on almost every deal we had. We're about 10% off. I would say 30 days later now, that's softened a little bit. I would say now I'm kind of getting in between that 6-7% off. Some sellers are kind of starting to soften a little bit, but it's not as big of a spread.
I can piggyback what these guys were saying. I think in the BOV process, or when we're doing valuations, if you purchase an asset in 2021 for 2022, I was telling somebody today, I was in the valuation for somebody who income about 30 or 40% in the last 15 to 16 months, and my BOV, my valuation came out at what they wanted at. So I think there definitely is still a bid to ask spread in our valuations that we're giving out our units that were purchased in 2021 and 2022. And then, like piggyback what Craig said, we do have owners that have owned assets for 5, 10, 15 years that if they want to retire or whatever reason they want to sell today, they're still able to turn a healthy profit. And I actually think that's where a lot of the velocity is going on right now. It's going on with owners that have owned their asset for more than 3 years. I don't have one deal under contract that was purchased in 2021 or 2022 to be granted to us.
Yeah, I completely agree with everything the guys have said. I think it's very dependent on the seller's motivation. Did they got a BOV done 12 months ago? Didn't like the price that, we showed them, and then they spent the past 6 months working on operations, and we'll visit it again. And, there is a 5 to 10%, but it's definitely come in to where it was 10 to 15%. So the gap is definitely narrowing, but there still is a little bit of a disconnect.
Yes, another follow-up question says, with these trends that you're noticing, what would you say, or how would you predict the next quarter or so as far as transactions going forward? Either deals coming to market or volume of deals going up or down? How are you anticipating business over the next 2 quarters?
I think it'll just be more of the same. I don't anticipate it being much different. I think there's a chance the Fed may pause, raising rates, but they're still high. And so, there's a pretty big relationship between
the interest rate and the price of the property is. So I think, we're all up here just kind of out there trying to make deals and find deals that work. And I think it'll continue to be challenging, but there'll be deals out there. You kind of have to underwrite a lot of them, talk to a lot of people and work hard. But if you do that, there's opportunities. But I don't see it being like that the market's about to turn, just yet.
Kind of agree. I see the off-market activity is starting to pick up, but that doesn't mean closings are gonna take place, right? I've seen a lot more sellers interested in kind of throwing feelers out there, wanting brokers to shop their deals and figure out where they can transact at. Doesn't mean that, like I said, the closing's gonna happen. Us personally, as a brokerage, I've been focusing on new developments and trying to basically smaller deals, smaller new developments and trying to sell deals at CO. A lot of developers don't have the ability to hang on to these high construction interest rates. And so there's some new construction product that I think that will probably pick up our brokerage's volume over the next 2 quarters. But as far as value add space, I would credit that hopefully it turns, but I don't see it happening anytime soon right now.
I think by the time we're in Q3, especially before I think things will pick up. Because there's a lot of these deals that were bought in 2021. I think 2021 was the highest sales velocity year for the most likely industry ever. And these are all 3-year bridge loans. So next year we'll have a bunch of loan maturities, and if they're not qualifying for their plus one and that bridge extension, I think we'll have to make a refinance or selling decision. So people that bought in Q1 of 21 and Q1 and Q2 of 2021, I think will start to put the pressure on people this year that they're going to make a decision on what's going to happen. We have to make a move, whether it's refinance or selling.
Yeah, I agree, and I think the fundamentals here in DFW are so strong, and I think it just takes time for people to adjust to the new market that we're in. Say we've been in it for 12 months, nobody is for sure what's going to happen with interest rates, but I think over time we're going to see a yield in Q3 and Q4 more activity, and we have more escrows right now than we did 6 months ago. So I am confident that things will start to pick up.
Don't want to beat a dead horse on the pricing thing. So before I switch gears on topics, did anybody in the audience have any other questions along the same lines or anything that you're ready to ask?
I have a question you may have asked earlier, but I don't remember. Good point here, but how far off are the bids coming in on which we're pricing right now? And what is your guidance to sellers when people are bidding far lower than sellers willing to bid?
Rob is asking how far off the bid price is compared to whisper price. So I mentioned last year, I'll try to speak up. I tried to sell some deals and the bids were coming in maybe 15% where below where I needed them to be. So this year we've been much more conservative and the deals that we have out there, like we just ran 3 calls for offers here in DFW, and they're coming in at where we told them they would now, because we learned a few months ago that the market had changed. So it's been an education process to the sellers. Both of those is the portfolio that I mentioned. And do get with me after this because he's got a couple other ones we're going to roll out. But the other one was a little townhome deal in Rowlett that the guy had for 15 years, and his brand manager is retiring, so he's ready to sell it. And now when it came in, we were able to get the pricing we told him we were going to get. It's because we knew better than to be too aggressive and have him be disappointed and waste a bunch of buyers.
I don't know if you didn't hear it. Sterling said it right, I think, a couple questions ago, but like he was saying, we were 10 to 15% off, I'd say a few months ago, and now we're in that 5 to 10% range. So they could get a number there, but that's
Yeah, I'll agree with these guys. That's kind of about probably 10-15% off still. It's not when they're purchased the deal.
Thank you, guys. Okay, so like I said, in the beginning, we have a lot of general partner groups here, people interested in and still looking for deals and still buying. How can our buyer groups set themselves up for success? Starting with, how can we formulate our offer? What's a successful offer structure that you're seeing right now? Besides obviously just stating what's the price. There's some other terms that you think would be beneficial for people to keep in mind to make them.
A little bit outside of terms, but something that helps us as brokers going to these sellers is giving us as much ammo as you have behind your offer, right? So take terms aside, get your insurance quotes, get your debt quotes, give it to us, show what they're coming in at, insurance especially, so we can go to that seller and try to help them. We all want a deal done as bad as you guys want a deal done. So the more ammo you give us on your offer, the better feedback you give us can help bridge that gap. Term wise, I haven't really seen too much difference, maybe some of small financing contingencies, but I think you're gonna ask some questions on earnest money later, so I can say that, but yeah, I'd say just give me as much ammo as possible.
I'd agree with him as a buyer in today's market, want to get a deal done, you gotta come like, let a broker know where your equity is coming from, or who the rate your money from, and what the average check, just the more information you can disclose as a buyer, it helps the broker get a deal done. And I think also, as buyers, when you're looking for deals, you gotta be talking to brokers, you gotta be consistent with brokers. I'll have a buyer reach out once, and I'm really busy in the day, and sometimes I take a little bit to get back to them, but I also have guys that follow up and are really consistent while staying in front of me, and that does take like money too. So you got to be with brokers, talk to brokers, try to become brokers and source deals.
Yeah, I agree. I think it's good if you're going to be a first time buyer to have a mentor who's coaching you through the process. I think broker relationship is very important. Staying in touch with them and, developing that trust. And whenever you do go and submit offers, filling out the buyer's questionnaire, to the best of your ability, like you guys were saying, it's so important for us to know the full story and to be confident in your ability to close the deal. If we're going to go to our seller and, represent you and say, this is a good buyer for this deal, I'm confident that they're going to be able to, meet the terms that they have laid out. And so I think it's important to develop that trust early on.
I think the only thing I would add to that is that, just be aggressive. It is a good time to buy. I talked to people, that were looking in 2013, and they were looking at 14, and they were looking at 15, and they were looking at 16. It's like eventually at some point you're going to have to take on some risk and jump in to get your first deal. And so, it's not a bad time with these guys telling you pricing is down 10 or 15% where it was a couple of years ago, to be a little bit aggressive. And risk goes to those people best equipped to bear it. So if you are, financially and, have some people around you that can help you, take a run at something, then that's what I was saying.
I heard a few things. I heard a few things today. So, FaceTime, building relationships with brokers, that's big. It's the relationship industry, relationship sport. So, building that rapport with the brokers and having a team around you that's going to give you that credibility is big. And being confident in making your offers, going and giving them the confidence you're going to close, because they want to close just as badly as we do. Question over here.
Like on a certain need in the economy, are you guys analyzing these properties and things that are going to be like vacancy issues or the rents going up and all the protections? Where you pay rents back from down eventually for affordability, like you see.
Just to summarize the question, maybe. So trends in rents going up or down, you're asking their perspective on rent increase? Yeah.
Absolutely, we're looking at that. I mean, rent growth in DFW is on the top of the nation for the past, I don't know how many years, but it's not gonna, we're not analyzing with that extreme 15 to 17% rent growth, 15 to 17% rent growth that we did a couple of years ago. The rent growth is slowing down and expenses are going up. So I'd argue, yes, we are looking at that data, but then like kind of what Sterling said earlier is we're also looking at the data that we're heavily protected here in Texas with the job growth and our economy in our particular market. So we heavily rely on that as well. And, you know, the rent growth percentage might not go as up. I don't personally see an issue going to happen with occupancy levels because we're in a massive housing supply and demand issue right now in Dallas, and more people can afford to buy homes every year. So the occupancy in apartments, I don't see having an issue with, but rents as far as growth might slow down.
Yeah, and that's another thing that you'll see is like, Dallas Fort Worth rent growth is slowing down, but I don't like that headline because we have 21 and 22 rent growth out of 15%, but we've slowed down to what? 7-8% rent growth in Dallas, I think, on the trailing 12. And I think the national average for rate growth is like 3%, so we're still outpacing the nation. So, yes, we can factor rate growth slowing down, but if we're still at 4, 5, 6, 7% rate growth in DFW, we're still outpacing a lot of other markets throughout the country. So, I think rate growth is slowing down. It's got to be taken. So,
And I would say, for underwriting purposes, it's important to have, you know, your operations is where your capital is going to be coming from, and having a strong property management group in place that is able to run your property, or say you're self-managing, you know, you have to ensure that your occupancy stays high and rents are continuing, they're going to increase, not like they were 12 months ago, but I think it's important to understand the operations of the property to ensure that you're cash flowing it well, despite expenses have gone up. I'm sure everybody's aware of how much insurance has shot up in the past 12 months. And so, you know, when you're underwriting your properties, to just take all of those things into account.
I'd say, you know, the sort of what I've heard called like organic rent growth is definitely going to be flatter. But every buyer I talk to is looking for some sort of a value add, some way they can increase rents. And I bought a little deal last year. I think I bought it right at the peak. I mean, I don't think anybody came close to me buying it at the absolute peak. It was just like, you know, steadily, you know, the market is gone like in the toilet. Like I feel like we're in the toilet right now. But yeah. I mean, I closed April 1st. So, but what I found with that property, it was, you know, a guy had owned it for a long time, and the rents were below market. And so, you know, but what I did was I wanted to keep some of those renters, so I gave them something, right? I you know, whether they needed new appliances or fixtures or just the, you know, the gates to be operational, you know, and I mean, little things like cleaning up stuff, because a lot of these, you know, owners, as you know, time goes on, things just start to slip, and you know, properties become neglected a little bit. There's deferred maintenance. We talked about deferred maintenance. So I think that you're going to have to manufacture some rent growth and add value to the property. But there are lots of ways to do that. And renters, if you have a conversation with, you know, I talk to these tenants and stuff, and I tell them about property taxes and about insurance and about how, you know, I'm trying to make your place better and invest in the property. You know, they want to see, they don't want to think of me or anybody in here as a greedy landlord, right? You know, they want to feel like they're getting something for that rent increase. So I think if you provide that, you can get a lift, you can get some more rent. But just coming in and jacking the rents up and continuing to operate the property marginally, I think, is where people are gonna get in trouble and have already gotten in trouble.
So just a shameless plug on that, we're actually gonna have eventually a speaker series on asset management, so we're gonna cover this topic in depth, so keep coming back. Question here in the front.
Question about, are you seeing more transaction volume in certain stock markets? So
That's actually a great question, one I had on this as well. Are you seeing higher transaction volume in pockets of DFW or specific submarkets? And if so, why do you think that might be?
To be honest, no. From me personally, our firm, it's hard to get a deal anywhere to pencil right now, so I don't think it's too market specific, right? If that deal makes sense in Garland compared to make in Plano, obviously, yeah, people might want Plano a little bit more, but it's hard to find a deal that's financially there, and I don't think the submarket is in a huge impact in that. In Houston, that question's a different story. Yes, we see deals in Houston. It's a little bit more of a pocketed city, and there's already submarkets there outperforming others drastically. But here, I haven't seen that too much.
No, I agree. I don't think there's one submarket that's getting more deals done than the other. But I would say that deals that are agency financeable definitely are the ones that are already done. Because you can't get agency finance on your deal right now. You don't have a deal to. You got to go focus on the asset management.
Yeah, I agree. I think if the deal pencils, then it pencils and everybody wants to jump on it. I don't think it's necessarily sub-market specific. And yeah, it definitely comes down to your underwriting and your debt terms. And just everyone's trying to make deals work right now. And so I've seen a lot of people's buy box kind of get a little bit wider because, they're willing to look maybe at that market they weren't willing to look in before because they want to get deals done and people will get creative.
I just add that, maybe some markets where the basis is a little bit lower, because, if everybody in here that's, thinking about investing or being a sponsor on a deal is trying to, I see the pitch a lot, is trying to hit a 2x multiple, right? And trying to double the equity, when they go to sell. So, if you're buying at 150,000 a unit and, you put in today's market, 33% down, maybe I'm just using some easy numbers here, to double that 50,000 per unit in equity, now you need to sell at 200 a unit. Whoever you sell it to, they're going to be thinking, okay, how am I going to sell it for, 250 a unit? And so it starts to become, and I think there is room, don't get me wrong, in Dallas, we're still a bargain of a market compared to coastal cities, and where rents are all over the country. There's units that are trading for 300,000, 400,000, 500,000 a unit. But here in DFW, it seems like, looking at the basis is always going to be, at least in the stuff that we sell, it's always going to be somewhat important because of that, just that metric of where's my exit? What does my reversion cap rate look like? And what's my price? I'm going to have to get the next guy or gal to bite off on and think about where they're going to edge.
Awesome. Well, I've got one last question in mind. I want to open it up. Does anybody else in the audience have anything you'd like to close here? Yes, at the front. Any questions, any insights specifically on fourplexes?
I like fourplexes, if they're financeable through, a single family, route. And I've had a fourplex, for a long time. As far as finding them, I think, you're probably gonna, maybe need to look towards some residential brokers. I think it's hard for us to chase those deals, because it's just hard to make money with them. We're kind of focusing more on, 8 or 12 units. But I do think fourplex could be a great investment, a great way to start. Anybody else want? Awesome. So last question, sorry, Jill, question? Go ahead. So transaction volume in specific unit quantity, where the highest volume, the size of the deal.
Say, like $10-15 million below. So the private client space, I think is where we're still seeing good velocity. And deals get done. On deals that are 20, 30, 40, $50 million, which somebody has still raised 10, 15, $20 million. Those deals are definitely slow down. It's a lot harder to raise $15 million than it is to raise $1.5 million from investors today.
I guess kind of like what Prep was saying, how, kind of hunting smaller deals right now. I agree. I think smaller deals are probably transacting more, and that's mainly due to the down payment that you're having to come up with on a property is a lot bigger percentage wise today than it was last year. So the guy that maybe could afford a $30 million deal last year has lowered his criteria to 20, right? So everyone's dollar volume on a price tag's gone down. So probably smaller deals are transacting more. But yeah.
We've been laser focused on anything that pays the commission. I've done, what do you got? What do you got? Let's sell it. What do you need? No, seriously, it has been, like I mentioned, focusing on the smaller deals. And really, it's more about, the investment for that owner and where they are in their business plan. And, you have to hunt quite a bit to find a deal that works. But I think there's opportunities in the small deals because there's not a lot of buyers. A lot of the bigger syndication groups, they want to be at 100 units plus. And, there's competition is I think more difficult with those. So I'd encourage anybody that's starting out. Yeah, it is more difficult to manage that deal I mentioned. I bought 12 units. There's not a lot of economies of scale there. I think I pay $1,100 a unit in insurance, and I'm getting calls from my tenants on the way up here. So I mean, it's not glamorous, but you got to start somewhere, and that's a good place to get going.
So last question is kind of an example-based, scenario-based question. So let's say, for example, we've got a B-class deal competitively priced right around 15 million. And you're working with a buyer who wants to come in and put in a really strong offer. What guidance would you give them as far as money going hard day one and closing time?
I think just it's class B, everybody wants 1980s or newer. If it's well priced in this market. There's not a lot of deals that are well priced in the market, so I think that's a competitive situation. So in Dallas Fort Worth, 15 million, 1980s or newer. Non-refundable day one, 30 days due diligence, 30 days to close, and for a 15-day extension or earnest non-refundable. So I think that's what. 2%.
I mean, agreed. Like we've been saying, it's hard to find a deal that pencils, right? So if you find a deal that pencils, a broker is going to tell you to put your money where your mouth is, right? And everyone in this room wants one, right? So you got to beat out the other guy. We're still going to expect non-refundable money. I'm not saying we might say day one, might be the first week, or even a staggered approach where it's X goes hard day 3, maybe a little bit more day 10, kind of a buy-in situation, but still got to buy into the deal.
Yeah, I would say recently we had, wasn't a 1980s, the perfect deal, but we did have some offers come in, and the one that won the deal, you know, their money went for day one, and so it definitely gives a big advantage right now, and so I would say it's very important in being able to move fast.
I'd say, just to get to dive a little deeper, there's a correlation between price and terms, right? I'm educating buyers and sellers, on this all the time. Right? I could, that $15 million deal, I can get a guy to put up $1 million hard day one. But his pricing is gonna be much different than the group that's new and they're scraping together, 1% of the earnest money. And the sellers who's gonna have a decision to make. We're gonna try and do the best we can to educate them on, how much risk they're taking with this. But their price is gonna be higher, because their terms aren't gonna be as good. And they're gonna be a little green, they're gonna need some hand holding, there'll be some extensions. But it's kind of finding that balance there. But just to answer your question, I'd expect if price was, it's gonna be competitive, it'd probably be, at least 10 offers, I would imagine, and yeah, a six-figure non-refundable earnest money at contract execution. And yeah, and a lot of people are doing some sort of access agreement or something like that. But if it's a pretty clean deal, there's gonna be competition. It all depends on price, and then if it's priced too high, there's gonna be very little competition. And then, like a lot of my competitors, and I've been guilty of doing myself from time to time, is you tell people, yeah, we think it'll trade right here, and then best and final, you really need to be here to be competitive. Yeah, we got it. So there's a little bit of a bait and switch on pricing that happens, just inevitable in brokerage. But I think if something is truly priced well, in here in DFW, it'll be competitive.
Thank all of you again for joining us this evening. I definitely encourage everybody in the audience to come up and introduce yourself to our brokers, to take time out this evening. And with their families for being with us this evening. So thank you guys again. And like I think Sterling mentioned earlier, it's a relationship business. So this is an opportunity to build relationships, mingle. We've got the room for 90 minutes or so that you're welcome to stay till close. Also, we've got a few QR codes up here. So this is the host contact information. Again, we've got Nick, Yoshi, I'm not sure if Juan is here, Rob and myself. And then Apartment Educators up here sponsored. Nick Portiger is here as well. And then this is an organization that we support, Operation Underground Road. If you want to learn more about that, we've got the QR code here, and also Nick Dillon also is very passionate about this. We would love to share some information on that with you as well. So with that, I'll conclude. Please stick around and network, and thank everybody for coming out tonight.